Hi everyone, Robert Mack here. Over the past few weeks, something important has been happening in the Orange County housing market that most people haven't noticed yet. Mortgage rates have dropped close to 6%. Inventory is quietly rising and buyers are starting to come back into the market, but not in the way most people expected. In today's quick update, I'm going to walk you through 4 trends I'm seeing right now, including one shift that could create a really interesting opportunity for the buyers and sellers over the next several months. Let's dive in. By the way, I've been selling real estate here in Orange County for over 20 years, and this is one of those moments where the data is starting to shift before the headlines fully catch up. The big picture. The big story right now is that the housing market is slowly starting to loosen up. For the past couple of years, the market felt pretty tight. Inventory was extremely low, mortgage rates jumped quickly, and a lot of homeowners stayed put because they had locked in super low interest rates. But things are changing. Right now, there are about 3,500 homes available in Orange County, which is about 11% more inventory than we had 1 year ago. That's good news for buyers because for a long time, they simply didn't have many options. But it's important to add some context. Before the pandemic, Orange County typically had closer to 5,000 homes on the market at any given time. So even though inventory is rising, we're still about 35% below what used to be considered normal supply. In other words, the market is loosening a little bit, but it's still relatively tight compared to historical standards. Now let's talk interest rates. Another big factor shaping the market right now is those interest rates. Mortgage rates are currently hovering around 6%, which is the lowest range we've seen since late 2022. And that small shift has a pretty big impact on affordability. For example, a buyer looking at about a $5,000 monthly mortgage payment last year when rates were closer to 7% could afford roughly $940,000. Today, with rates closer to 6%, that same buyer can afford $1,042,000. That's roughly $100,000 more purchasing power simply because interest rates dropped by about 1%. Another way to look at it is this. On a $1 million home with a 20% down, the payment at 7% would be $5,322 a month. At 6%, that payment drops down to $4,796 per month. That's a $526 per month savings. So while affordability is still a challenge in Orange County, conditions have definitely improved compared to last year. 4 trends I'm seeing right now. Let's talk about these trends. 2 of them you're probably hearing about in the news, and 2 of them are a little bit more behind the scenes. Trend number 1, interest rates are improving affordability. The first trend is an obvious one. Mortgage rates dropping closer to 6% have improved affordability and brought some buyers back into the market. Lower borrowing costs allow buyers to either afford a slightly more expensive home or enjoy a lower monthly payment. And for many buyers, that small shift is enough to get them back into the game. Trend number 2, inventory is finally rising. The second trend is that inventory is beginning to rise. Right now, we have about 3,500 homes on the market in Orange County, which is about 11% higher than last year. Over the past couple of weeks alone, inventory has increased by about 5%. This usually happens as we move into the spring market, which is traditionally the busiest time of year for real estate. More homes on the market gives buyers more choices, which is something we really haven't seen much of over the past few years. Let's talk about trend number 3. Most of the new inventory is not luxury homes. Now here's something interesting that most people are not talking about. The increase in inventory is primarily happening in the homes below the $2.5 million price range. In that price range, inventory is up about 19% compared to last year. Meanwhile, the luxury segment above $2.5 million is actually down about 18% year over year. So the additional inventory we're seeing is mostly helping entry-level and move-up buyers, not necessarily the ultra-luxury market. Trend number 4, buyer demand has not fully returned yet. This 4th trend is something I find particularly interesting. Even though conditions for buyers have improved, buyer demand has not surged yet. Right now, buyer demand measured by pending sales is about 1,542 homes. That number is almost identical to last year. But if you look back at the years before COVID, Orange County typically saw around 2,400 pending sales at this time of year. So demand today is still significantly below historical averages. What that means is the market is improving, but many buyers are still cautious. Some of that caution likely comes from economic uncertainty, global headlines, and people waiting to see where interest rates go next. Another important metric to watch is something called expected market time, which measures how long it would take to sell all the homes currently on the market at today's buying pace. Right now, the expected market time or absorption rate in Orange County is about 69 days. Last year, it was closer to 61 days, so homes are taking slightly longer to sell. But overall, a 2-month market still indicates a fairly healthy market. Now let's talk about the luxury market. Since many of the homes I work with are in the higher price ranges, it's worth talking briefly about the luxury segment. For homes above $2.5 million, the expected market time is currently about 148 days, which is roughly 5 months. And for homes above $6 million, the expected market time can stretch closer to 8 months. That doesn't mean luxury homes aren't selling. They absolutely are. But pricing strategy and presentation become incredibly important at these higher price points. If you're thinking about buying a home within the next 3 to 6 months, the most important thing you can do right now is preparation. Talk to a lender. Understand what your monthly payment might look like, and start paying attention to the neighborhoods and pricing. Because when the right home appears, being prepared makes all the difference. If your timeline is 6 months to a year, this is a great time to start watching the market and learning what homes are actually selling for. And if you're thinking about buying in a few years down the road, it may sound too early to start, but having a conversation now can help you build a long-term strategy. Now I want to talk to all the sellers out there. For sellers, preparation is just as important. If you're thinking about selling within the next 6 to 12 months, starting early can make a big difference. That might mean making a few improvements, preparing the home for staging, or simply understanding how your home's value has evolved over time. The best listings are rarely rushed. They're prepared. One thing I always tell people is that it's never too early to connect with a real estate professional. Whether you're thinking about buying next month, selling next year, or simply curious about your home's value, having a conversation early can save a lot of time and stress in the long run. And sometimes those conversations aren't even about real estate. Sometimes people reach out because they need a lender, a contractor, a CPA, or help planning their next move. The big takeaway right now is this: the Orange County market is slowly thawing. Inventory is rising. Interest rates have improved, but buyer demand has not fully returned yet. And when markets are in transition like this, that's often where the most interesting opportunities appear. Now, one last thing before I go. If you ever have questions about the market, if you're thinking about buying, selling, refinancing, investing, or if someone you know needs help with real estate, I would absolutely love to be a resource. You can scan the QR code on the screen to schedule a time with me. We can meet for coffee, we can go for a walk and talk, we can jump on a quick call, or you can text me. I'm pretty easy to reach, and I always appreciate the opportunity to help. Thanks again for taking a few minutes to watch, and I hope to see you on the next market update.